The first secret to making big money in crypto is see through the lies of the mainstream media. It was only recently in April and May, every news station and most YouTubers were claiming Bitcoin's about to erupt to $100,000 based around some bank run by institutions surrounding the BlackRock ETF. This has been proven false by channels like DataDash, but here and now we're going to expose the truth. And upon this unveiling, we'll see that the media was lying as a matter of national security. There are psyops happening involving crypto across the internet all the time. Just recently with the popular altcoin Caspa, once these ASICs plug in, the price of Caspa is going to crash. On this channel, we were reporting the exact opposite, as historically on every single coin, every single time there's been a drastic increase in hash rate, the price has drastically gone up too. Was this backwards narrative all across social media actually trying to drive Americans out of this altcoin? Bitcoin is the godfather of all cryptos, and with that title, providing a lot of liquidity into the entire market. Before jumping into some of our to the day, to the dollar technical analysis reads like
August 14th, shorting altcoins is the date we're waiting for on this channel.
We've got to understand how the mainstream media has been lying to us and look at what's really been driving the Bitcoin price since January. Name's Jesse, professional poker player, mathematician. The Nord Stream 2 pipeline explodes. All of a sudden, the Russians have a surplus of energy. They can't sell it to Europe. They turn to their neighbors in China and they start buying truckloads of ASIC Bitcoin miners. As of right now, there are Russian Bitcoin mining addresses that have been blacklisted from buying defense equipment. On top of that, as we know, the US dollar is directly correlated to a barrel of oil. Whenever people go to buy and sell oil, it's done specifically with the US dollar. There are sanctions put in place preventing Russia from engaging in this trading activity. So they found a workaround. Instead of swapping their oil for USD, they're swapping it directly for cryptocurrency. And the United States government is looking to put that to a stop ASAP. That's in part where this BlackRock narrative starts to really come into play. We're going to get into that in a minute. As soon as these ASICs started plugging in, the hash rate of Bitcoin started rising. We all know that there's a direct correlation between increasing hash rate and increasing price with any cryptocurrency. And as of January of this year, the hash rate of Bitcoin was significantly rising as the Russians were starting to turn on their Bitcoin war machine. BlackRock comes in to save the day with their SEC filings. On page 78 of both the first and the second filing, BlackRock throws in this little clause that will allow them to fork Bitcoin at any time they see fit. This means BlackRock will have the power to bring the Russian Bitcoin war machine's entire valuation down to zero simply by hard forking Bitcoin. What this means for your regular everyday hodler, let's say that you've got 1.3 Bitcoin that you've been holding on to. BlackRock will simply airdrop you 1.3 of the new BlackRock approved Bitcoin. And your old Bitcoin will be considered null and void, valueless, only used by computer nerds, money laundering. They are literally trying to put the word chain back in blockchain, because once BlackRock can pull off this hard fork, we've lost control of the ship. All of the content creators that were so giddy about this propaganda, oh, there's going to be a nice big spike in Bitcoin, this is the best thing to happen since sliced bread. These are the exact same fools that were telling everybody in April, Bitcoin's about to break out. Of course, a lot of this is out of the common man's control, and all that we can do to prepare is generate the maximum wealth from it as we possibly can. Now, we've been having a lot of success on this channel, trading $12,500 into today what's valued at $60K. And we've done this using one extremely simple concept that we're going to go over for what we're calling the #1 Bitcoin trade possible. This is not financial advice, and I'm not a financial advisor. Origin trend lines. Take a look at the Bitcoin chart. Off the 2021 peak to right now, there's this descending trend line of doom. You can clone this trend line and move it back to the previous spikes, and the candle respects it to a T. The spikes before that, exact same thing. This trend line fits perfectly, and we can see this exact same pattern across every altcoin. Let's take a look at AVAX, for example, one of the major cryptos. See this descending trend line of doom, the same one we were looking at Bitcoin. Clone it, move it down to the previous breakout, fits like a glove, and so on. Solana, same thing. Matic, it's all over the place because, as we know, they almost all behave more or less in unison with Bitcoin. These origin trend lines are your #1 tool to start any technical analysis of. Now, there was no way back in April and May at our first attempt were we going to actually break through this descending trend line of doom. And even in this scenario where we did so, we'll definitely retrace it. Instead of using it as resistance, we'll bounce off it as support once before. Zooming back to the last halving event, we can almost see an exact replication of what's happening right now. As we can see that we broke out of our descending trend line in 2020, right before the halving, in January exactly. Fast forwarding to today, we're the exact same distance and time away from the halving. Hold 25,000 until January. We'll then start breaking out of this descending trend line of doom. Once we get past this falling line, the candle will have more freedom to move upward, where we should be able to reach heights of at least 28,000 before then dropping back down, bouncing off of this trend line that was acting as resistance so much as one final support, until then we start moving sideways and then into our bullish breakout for the halving bull run. We have just outlined your most definitive #1 trade that you should be looking for, which is of course the bounce off of this supporting trend line after we break out of it. As we can see, every time we've broken out of this exact same trend line, the past 3 times we've broken out of it over the span of like almost 8 years, we've always bounced back off of it as support. There are people out there who believe technical analysis does not work. Considering the fact there were handfuls of YouTubers using charting techniques to explain how Bitcoin was about to reach 100,000 back in April, you can kind of see why these people would get that idea. On this channel, we weren't just calling out that Bitcoin and altcoins were about to crash. We put our money where our mouth is. We shorted AVAX off of the resistance from that descending of trend line of doom that we described earlier in the video. We were handsomely rewarded. Once you have a good read on a chart, it will continue to hold its strength. And we have this descending trend line of doom on the Bitcoin chart that we still haven't even broken out of yet. This is giving us massive insight into the candle's movement. Of course, we have a lot of other charting techniques, methods, indicators that we'd like to share with you guys, but we just didn't have time to fit it all in on this video. Hopefully you guys gained some sort of insight from watching today. If you did, consider hitting a thumbs up button, drop me a comment, and we'll catch you in the next one.